If your company builds AI models, trains machine learning pipelines, or is solving a technical problem that your team cannot simply look up the answer to, HMRC may owe you back 27 pence for every qualifying pound you have spent. That 27% rate is not a rounding error. It is the enhanced R&D intensive support rate for pre-profit AI companies. And in the next 7 minutes, I'm going to show you the 3-part test HMRC applies to AI work, which specific activities qualify, and what the actual recovery looks like in pounds. By the end of this video, you will know exactly how HMRC's definition of R&D applies to AI and machine learning work specifically. You will know which staff costs, compute costs, and subcontractor costs you may be able to include, and you will know what the typical recovery looks like for a company at your stage, whether you are profitable or still burning runway. None of this requires a sales call, just 7 minutes. This video features an AI-generated presenter. All content is for educational purposes only and does not constitute tax or financial advice. Always consult a regulated specialist for your specific circumstances. Here is the context. HMRC published its R&D tax credit statistics in September 2025. In the professional, scientific, and technical sector, the average claim value is £103,000 per year. That sector includes most AI consultancies, machine learning firms, and technical services businesses. And yet most of the AI founders I speak to have one of two assumptions. Either they assume R&D credits are for pharmaceutical companies and university spin-outs, or they assume their work qualifies obviously, but they have never actually filed a claim. Both assumptions cost money. The truth is that AI and machine learning work sits right in the middle of what HMRC's technical definition covers. But there are specific questions HMRC will ask, and the way you answer them determines whether your claim stands up. HMRC applies 3 questions to any R&D claim. First, is the company trying to achieve an advance in science or technology? For an AI consultancy, this means, are you solving a problem where no existing model, framework, or library does what you need? Not fine-tuning an existing model on new data. Not implementing a published architecture in a standard way, but genuinely pushing into territory where the approach is not yet known. Second, does the work involve scientific or technological uncertainty? Uncertainty, in HMRC's terms, means a competent AI professional could not have solved the problem by applying publicly available knowledge. If your team is making architectural decisions, designing training approaches, or building evaluation pipelines where the outcome is genuinely unknown at the start, that is uncertainty. Third, is it a systematic investigation? HMRC wants to see that your team tried things, measured results, adjusted the approach, and iterated. That process, even if it ends in failure, is R&D. Specific activities in AI work that may qualify. Developing a novel model architecture for a domain problem where off-the-shelf models perform inadequately. Building custom training data pipelines that solve an ingestion or labeling problem that existing tools cannot handle. Creating a retrieval system with performance characteristics that no existing vector database achieves at your scale. Designing evaluation frameworks for model behavior in safety-critical or regulated environments. Once you have confirmed the work qualifies, the question is, which costs count? Staff costs are the largest category for most AI businesses. That means salaries, employer national insurance contributions, and employer pension contributions for any employee spending time on qualifying work. You do not have to claim 100% of anyone's time. If a machine learning engineer spends 60% of their time on qualifying projects, you claim 60% of their cost. Subcontractor costs can also be included, up to 65% of what you pay an unconnected subcontractor doing qualifying work in the UK. And from April 2023, cloud and compute costs became qualifying expenditure. That means GPU compute time on AWS, Azure, or Google Cloud, where those resources are used directly in qualifying R&D workloads, may form part of your claimable expenditure. For AI companies running model training jobs, this is often a material addition to the claim. Let me give you concrete numbers. Under the merged R&D scheme, which applies to all periods from April 2024 onward, a profitable company recovers approximately 15 pence for every pound of qualifying expenditure. So if your qualifying costs, engineer salaries, compute, subcontractors, add up to £300,000 a year, you are looking at roughly £45,000 back. If your company is loss-making, which describes most early-stage AI businesses, and your R&D spend represents more than 30% of your total costs, you may qualify for the ERIS scheme. Under ERIS, the rate is 27%. On £300,000 of qualifying spend, That is £81,000 back from HMRC as a cash payment. Here is the mistake I see most often in AI company claims. Most first-time claimants include only the direct R&D engineers. They miss the data engineers whose pipelines support the qualifying models. They miss the DevOps cost for the compute infrastructure, and they miss the proportion of the technical lead's time spent coordinating the R&D program. Those costs are legitimately claimable. A specialist will find them. A DIY claim or a generalist accountant typically does not. And the difference between a well-prepared AI claim and an underprepared one is often 20 to 30% of the total recovery. So, to bring this together, if your AI company is solving technical problems where the answer is not known at the start, you likely have qualifying R&D activity. Your qualifying costs include engineer salaries, UK subcontractors at 65%, and GPU compute costs from April 2023 onward. The average claim in your sector is £103,000 per year, and the single most important thing to remember, you have 2 years from the end of your accounting period to file. That clock is running right now. If anything in this video resonated with your situation, the next step is straightforward. There is a free, no-obligation specialist assessment linked in the description below. It takes 5 minutes to complete. The regulated specialists I work with operate on a no-win, no-fee basis. If your company does not qualify, there is nothing to pay and nothing to lose. The link is uplifttax.com/partners/E5J3P6. It is also pinned in the comments. If you found this useful, you might also want to watch the video on ERIS, that is, the 27% rate for loss-making companies, or the video on exactly which costs you can include. Both are coming up on screen now. I will see you in the next one.